Hi everyone, welcome to this session of the Tiger Academy, US Stock Financial Statements for Beginners. Now that you've learned everything you need to know about financial reports, how will you apply the knowledge in practice? Those of you with investment experience will know that there are two steps to invest in stocks: selection and trading. From here on, we'll choose good listed companies based on financial reports and then trade their shares to make a profit. Over the next two lessons, we will look at the main industry sectors of US stocks, figure out which ones are the most profitable, and then look at the financial reports of listed companies to find good ones. Let's take a look at how many industries are represented in the US stock market. First, let's look at how US stocks are classified. GICS is considered to be the most reliable way to categorize US stocks. It was launched by MSCI and Standard & Poor's in August 1999 and is known around the world. So, what exactly is GICS? GICS stands for Global Industry Classification Standard. It's a model for classifying industries, giving investors a complete global recognized set of definitions of industry sectors. If you find this definition is a bit abstract, let's take a closer look at it. The GICS classification system has 4 levels: 11 economic sectors, 24 industry groups, 69 industries, and 156 sub-industries. When you see GICS industry information in the news or in a financial report, it's talking about the 11 economic sectors in the first level, which is called the primary industry sector classification. You need only keep in mind these 2 important points about US stock classification. 1. GICS is one of the most authoritative classifications. 2. According to GICS, there are 11 primary industry sectors. What exactly are these 11 primary sectors? I've summarized them for you below. You might be wondering which of these 11 primary sectors is the most potential. I think you should focus on the following 4 sectors: information technology, energy, healthcare, and consumer staples. Here's why. The first sector we'll look at is information technology. Information technology includes things like software and services, technology hardware and equipment, and semiconductors. Why did I choose this sector? Let's compare the 2 countries with the highest GDP in the world, the United States and China. As I'm sure you know, the US currently leads the world in technology and continues to invest a lot of money in R&D in areas like the internet, AI, and semiconductors in order to maintain its lead. At the same time, China's science and technology-focused policies are starting to pay dividends. This is shown by the growth of its chips, electronics, and internet industries. In areas like electronics and semiconductors, products made in China will replace those made abroad. Overall, information technology in China is growing in a healthy way as a whole. According to data found in the financial reports of listed companies within China's information technology sector, Chinese technology companies have grown their revenue by more than 40% in the past year and more than 45% in the past 5 years. By comparison, US-listed technology companies have also reported excellent results, with an average of more than 25% growth in revenue over the past year and more than 19% growth over the past 5 years. This tells us that the information technology sectors in both countries have kept growing quickly and that the future looks bright. So, what are the most important parts of the financial reports of companies in the IT sector that I should look at? Vincent Wang, head of Tiger Brokers Community, suggests the following. 1. Revenue makeup and growth rate. In Apple's 2021 financial report, we can see that 80% of its operating income came from sales and services. So we can see that product sales are key to Apple's business. Apple's products are divided into several categories, such as iPhone, iMac, and iPad. In 2021, iPhone sales made up more than half of all Apple sales. So it's clear that the main data of revenue for Apple comes from the pricing and sales volume of iPhones. Likewise, the operating income of internet companies like Netflix and Bilibili comes mainly from member subscriptions. Revenue goes up when prices go up or when the number of members goes up. Since price hikes only happen once every 2 or even 3 years, you should pay attention to data on membership numbers. Apart from revenue makeup, you should also look at revenue growth. 1-year and 5-year revenue growth rates will show you a company's short-term and long-term growth performance. 2. R&D expenditure and expense. As the information technology sector consists mostly of technology companies, R&D is really key, as illustrated by R&D expenditure and expense in the financial report. For analysis, we can calculate R&D costs as a proportion of total revenue and compare that ratio with those of a company's competitors. The second sector is alternative clean energy. Because of global warming and the way the environment is getting worse, countries all over the world are working hard to develop clean alternative energy sources to replace traditional fossil fuels. By 2030, the Chinese government wants 25% of all the energy used in the country to come from sources other than fossil fuels. The industries that use fossil fuels will be taken apart. Given the current incentives of clean energy and the fact that the US is back in the Paris Climate Accords, the clean energy sector has a huge amount of room to grow. President Biden has signed an order that will give $500 billion every year to help equipment and vehicles that use alternative energy. It is expected that by 2030, half of all new car sales will be electric vehicles. Moreover, installed solar power capacity is expected to grow at an average rate of 25% per year globally between 2021 and 2025. With China's clean energy replacement strategy going into effect, the size of the global alternative energy industry is likely to grow even more. What should we focus on in the financial report of a company in the alternative clean energy sector? 1. Growth of revenue and net income. 2. Cash flow from operating activities. Industry leaders such as ExxonMobil, an energy company, have strong bargaining power. If its high growth in cash flow from operating activities continues, it will translate into outstanding sales numbers. If not, it probably means that growth will be below expectations. Third is healthcare. The healthcare sector is bound to experience robust growth over the next 10 to 20 years. Why do I say that? I'm sure you are aware that the issue of aging population is a serious problem in the world. According to the National Bureau of Statistics of China, the cost of healthcare as a percentage of urban family disposable income in China rose from 6.2% in 2013 to 8.13% in 2019. This is expected to rise further with the ongoing aging of the population in China. It is estimated that the percentage of the population over 65 years of age will exceed 20% by 2040. Moreover, the elderly live longer these days. The number of elderly people above 80 years of age is increasing by 5% per year. And by 2040, there will be more than 74 million of them. When people live longer, they need more healthcare. Additionally, the long-lasting pandemic will place a few healthcare companies that are focused on developing vaccines and special drugs on the fast track of development. What metrics should you focus on in a healthcare company's financial report? Besides the main operation income, I suggest that you focus on R&D expenses. As in the technology sector, the healthcare sector also has high technological barriers to entry. Consequently, whichever company's vaccine has a higher cure rate and proves to be more effective, and whichever company has a stronger patent technology, that company stands to be more profitable in the sector. But keep in mind that patents expired and technology becomes obsolete. Healthcare companies can suffer huge losses due to technological advancement. A case in point is Moderna, a producer of COVID-19 vaccines. In 2021, the company suffered a huge plunge in its share price because Merck, the German pharmaceutical giant, introduced an oral COVID-19 treatment. So, beware overly high R&D expense at healthcare companies. Some of you may ask, what if a healthcare company spends very little on R&D? Well, the answer is that would not do either. For example, a while ago, a Chinese pharmaceutical company lost 1.5 billion RMB when its share price plummeted due to stock market speculation. According to its financial report, the company's R&D expense accounted for only 0.55% for its operating income, less than 10% of the industry average. Clearly, the company was exercising very poor judgment in its management. So, you should be aware both over high as well as too low R&D expenses when analyzing healthcare companies. The fourth and final sector we'll look at is consumer staples. Consumer staples are daily necessities such as food and beverage. farm produce, as well as alcohol. Demand for consumer staples is pretty stable because we cannot do without them. Whatever the economic conditions, given this stable demand, consumer staples are one of Warren Buffett's favorite sectors. There are many world-famous companies in this sector, such as Procter & Gamble, Coca-Cola, Heinz, and Gillette. So, besides their stability, consumer staples have always produced some of the biggest winners in the stock market. Over the past decade, China's total volume of retail has been growing steadily. China has the biggest consumer market and the wildest consumer base in the world. Besides growth in total retail volume, its rapid urbanization and per capita GDP growth are also good signs for the continued growth of the consumer staples sector in China. The increase in its per capita GDP and the increase in urbanization are both driving long-term growth of the consumer staples sector in China. So, which financial metrics should you focus on the consumer staples sector? I would suggest the following 3. 1. Inventory. For consumer goods companies, inventory is very important. In this sector, if a company piles up inventory, it may be that its products have lost their competitiveness. You should compare its inventory data with the inventory levels of other companies in the same industry sector. 2. Accounts receivable. Accounts receivables represents a company's position in the market. The higher the position, the fewer the accounts receivables, which indicates high demand for the company's products. 3. Turnover. Turnover is the capability to do repeat business with others. The higher the rate of turnover, the greater the number of times a company does transaction with others. Companies with high turnover have strong operational capability. Okay, that's all for the 4 high-growth industries. I put together this chart to help you review. In today's lesson, we learned 2 important points. The first is that GICS is most authoritative classification method of US stocks, and that according to that system, there are 11 primary industries. Second, we chose 4 promising sectors. For example, information technology, energy, healthcare, and consumer staples. And I walked you through the key metrics in each sector. You should be aware that, given the different business models across various sectors, you'll need to focus on different metrics. Apart from 4 groups of metrics that you previously learned, you'll need to pay attention to how each sector is different and what its key metrics are. Now that you've learned the basics of industry sectors, we'll move on to the next lesson to analyze financial reports so that you can pick industry leaders. Are you ready? Let's begin!